All right, so today we're going to take a deep dive into market sentiment.
Sounds good.
Specifically, we're trying to figure out, is it fear or greed driving the market right now?
Yeah.
Big question, right?
Big question.
So we've got some interesting data to work with here.
Okay.
We've got a recent market analysis that combines a couple of things.
Okay.
So we're looking at the Fear and Greed Index.
Right.
We're also looking at the VIX Volatility Index, or the VIX, as people call it.
Mm-hmm.
And then we're also going to look at upcoming economic events that could impact.
Nice.
That it sounds like a lot,
Yeah.
but we'll break it all down. So first up is this Fear and Greed Index.
Okay.
You can think of this as like a thermometer for the market's emotions.
I like that.
Right?
Yeah.
So it's giving us a reading of how fearful or greedy investors are feeling at any given time.
Mm-hmm.
So today, the index is sitting at 46.71,
Okay.
which puts it right in the middle, so neutral territory.
Interesting.
So does that mean everyone's just kind of chilling out?
Well, not necessarily. Neutral readings haven't historically been super reliable predictors of market direction.
Oh, really?
Yeah. So the market loves to surprise us, right?
That's true. That's true.
So it could really go either way from here.
Okay, so neutral doesn't necessarily tell us a whole lot on its own.
Right.
But how does that play with the VIX?
Okay.
So the VIX is kind of like the market's pulse, right?
Yep.
Higher the value, the more investors are expecting big swings.
Mm-hmm.
So right now, the VIX closed at 15.10.
Okay.
So again, not super high, not super low, kind of like that Goldilocks scenario.
Right.
So what does that tell us?
Well, it suggests that the market isn't expecting any major moves in the near future.
Okay.
But it's really important to watch the trend over time before making any major decisions.
Gotcha.
As a general rule of thumb, a VIX below 30 often suggests that options contracts are relatively cheap,
Okay.
while a VIX above 70 usually means they're pretty expensive.
Interesting.
So right now we're in that middle ground again.
Yeah.
Which could indicate that the market's just kind of taking a breather.
Okay, so we've got this calm before the storm kind of vibe going on.
Yeah, potentially.
All right, but what could shake things up?
Well, that's where those upcoming economic events come into play.
Right, those can definitely throw a wrench in things.
Absolutely.
So we've got a few things on the horizon.
Okay.
We've got unemployment claims coming out,
Right.
which, that could make people nervous about the economy.
For sure.
If those numbers are bad.
Yeah.
And then we've also got some speeches by President Trump scheduled.
Oh, yeah. Those always have the potential to move the market.
Right, those are always a wild card.
Uh-huh.
And then I've also got retail sales data coming out, which gives us a snapshot of, how confident consumers are feeling.
Yeah, that's a big one.
So each of these events could really inject some volatility back into the market.
Absolutely.
So for example, let's say those unemployment claims come in way higher than expected.
Right.
That could trigger a surge of fear.
Yeah, people start to worry about a recession.
Exactly.
And that could send the market tumbling.
Yeah.
On the other hand, if President Trump gives a really positive speech about the economy, that could boost confidence.
Yeah.
Send the market soaring.
Interesting.
So it really just depends on how these events unfold.
Right. So it's not just what happens, it's how people react to it.
Exactly. Perception is everything in the market.
That's true. That's true. Okay, so we've got this neutral sentiment, we've got moderate volatility, and we've got a bunch of potential catalysts on the horizon.
Yeah, it's a really interesting setup.
It feels like we're at a crossroads here.
I agree.
But, I'm also thinking, don't historical trends play a role here too?
Oh, absolutely. Historical data can give us some really valuable insights.
Okay, so what do those trends tell us about how the market reacts to these kinds of situations?
Well, for example, one interesting trend is that times of extreme fear, when the market is basically panicking,
Yeah.
those periods have actually been followed by positive returns on average.
Wait, really? So buying when everyone else is running for the hills could actually be a good strategy?
It sounds counterintuitive, right?
Yeah.
But it's a classic contrarian approach. And the data seems to back it up.
Wow.
Of course, past performance is never a guarantee of future results.
Right.
But it's still a really compelling insight.
Yeah, so fear could actually signal opportunity.
It's possible.
That's really interesting. Okay, so what about the flip side?
Okay.
What happens after periods of extreme greed when everyone's overly optimistic?
Well, historically, those periods of euphoria have often preceded market corrections.
Oh, so too much excitement can actually be a warning sign.
Right. Think of it like a bubble that eventually bursts.
Yeah, that makes sense. Okay, so understanding these cycles of fear and greed is really important for navigating the market.
It's definitely a valuable piece of the puzzle.
All right, so to recap, we've got neutral sentiment, moderate volatility. We've got a bunch of potential catalysts coming up.
Right.
And then we've got these intriguing historical trends to consider.
Yeah, it's a lot to take in.
It is, but I'm starting to get a clearer picture of the market landscape.
That's great to hear.
Yeah.
And this is just the beginning.
Okay.
We've got more data to analyze, and I think it's going to reveal even more about the current market sentiment and some potential investment strategies.
Okay, I'm all ears. Let's keep digging.
Sounds good. Digging